If you guys can hear me, we're going to go ahead and start. If you guys can go ahead and mute your microphones. So today it's going to be a little bit of kind of like an intro on how to read your DU and LP and some income nuances. Just to kind of take a look at what DU and LP will ask for when, doing your transaction. So sorry about that. To start, so the first thing we're going to do is we're going to review DU. So a lot of us as LOs, the first, because I mean, I'm guilty of it. The first thing that I would do is I would take a look at this, and I didn't care about anything else, right? We would just move on and submit our loan. But of course, we definitely want to be reviewing our LP finding, our DU and LP findings, and making sure that things match our, because obviously DU and LP will pull from what we input in the 1003. So making sure, our LTV matches, our housing expense, our debt income expense matches, our loan amount, all that good stuff, our terms, loan type, loan term, loan purpose, always double checking our information is definitely going to help us. I've had situations where I had an approved ineligible, but my debt to income backend was pulling something crazy, and we had to just go back and fix the 1003. So whenever you guys have any type of issues like that, I'm either myself or Tanya can definitely help. Tanya is a master of finding these little niches that sometimes causes our DTI or housing to be a little off. I've had it where my housing expense picks up my debt to income ratio, which is a little crazy. So this is why it's really important for us to double check this, to be able to ensure that we are actually, matching what our 1003 is stating before we send it to underwriting. So there's important points to focus on your DU, your preliminary recommendations, your mortgage information, property information, credit and liabilities, your employment and income, assets and funds. This is all going to pretty much help you be able to know what to look for, what to ask for from your clients, and what your underwriter is going to ask for, because this is really what we base ourselves on. Your risk and eligibility here, as you can see, if you take a look at this, it's going to respell out, it's a cash out refi. We had a situation where a property was less than 6 months. As you can see, they must be, owners of the property for a minimum of 6 months. Property cannot be listed for sale. So then we're going to go scroll down a little bit here to your findings. Of course, your risk factor is based on your loan to value. You do have a must close by date here. This is based on your credit report, and it gives you your 90-day closing window. Here it'll just kind of mention to you if there is a home equity line of credit, what we calculate it by. We don't do HELOCs here, so in reality, this is not something that usually comes up a lot. Mortgage information. Why we want to review it again, just double checking your LTV, your housing, your front end ratio, your housing ratio, your debt to income ratio, your loan amount, your value. I've had it where the value changes and we get a DU that is off, and so all this is off. Your note rate, what type of loan you're doing, whether it's a refi purchase or cash out. So again, just double checking your information is super important on this portion here. Here and the property information, you're definitely going to find here if it's an appraisal waiver or not. Now, something that we definitely want everyone to be very, very cautious and aware of, there can be factors that change this. We've had situations where we go into underwriting with an appraisal waiver, comes out of underwriting, and when we go to do our CTC, some factor changed that caused us to have a not eligible. So we want to make sure that we're always, being cognizant of the changes in the loan that can invalidate your appraisal waiver. So this is super important for us to always just keep an eye on. Us as underwriters, we definitely run a final DU and for CTC and a DU before we send your approval back. Why? So that we can make sure that, you know, especially if there's any appraisal waivers, they're not invalidated. Credit and liabilities, when marking debt to be paid off, you know, you want to notate that we need to prove that these items have either been paid off through the transaction or outside of escrow. Now, if they're large amounts, like let's say here, this Ally is 14,000 and they paid it outside of escrow, you're going to need to source those funds, especially when they're, you know, any large amounts definitely need to be sourced. So even if they paid him outside of escrow and you submitted your transaction with these credits on there, you always are going to have to source those. So it'll ask you for that evidence of payoff, whether it was done through the transaction or outside of. So providing statements showing the current balance. And if there were large amounts, we do need to make sure that they had the money and source those funds. Credits and liabilities. Here, you want to always check for collections and charge-offs. A lot of us know that, you know, when you have a collection above $2,000 or a cumulative collection above $2,000, you have to hit them with a payment, and that's 5%. So, you know, that's where the income nuances come in. You know, you're going to hit them with certain liabilities. So you want to make sure your DTI is correct from the get-go. Charge-offs is extremely important. We've had a situation where we had a charge-off that DU wanted us to identify the dispute on the charge-off. Now, because if there's a dispute, it does not hit your credit. So the dispute needs to be removed and your credit needs to be reran. So your DTI can change, and it's a huge factor on there. So here, if you can see, it says lender must determine if the dispute account belongs to the borrower and confirm the accuracy. So of course, this is extremely important to look for when you have charge-offs and collections, or taking a look at your credit report and making sure there's any disputes. And if they do belong to your borrower, they have to be removed. A lot of us look at it like, you know, with FHA, this is also with Fannie. So, and it could be with Freddie as well, but so this is why you want to definitely always read your DU and LP. Like I said, I've been a culprit of one not to check it. So, you know, it's good to be able to double check all that stuff. Great. Sorry about that. Your employment and income. A lot of the times it does call out for just a pay stub, meaning one pay stub and a W-2. We are requesting a minimum of 2 or 30 days only because of our investors when we go to sell it. We have gotten away with being able to do like a 1 W-2 from the prior year, but, you know, just keep in mind if you are using, you know, overtime or bonus, you know, a VOE, we want to obtain a VOE because that's the only way we can go ahead and use it. Keep in mind with FHA, FHA has become a little bit strict on regards to using your overtime and bonus. So they will allow previous 2 years, not your current or year to date. So, you know, we had a situation where we had to kind of fight it. I mean, unless there's extenuating circumstances, which we have to prove, they usually will give you the previous 2 years. So when looking at your employment, you want to definitely look at what they're asking you for to be able to calculate your income correctly. If you're giving them base, I mean, it's a little bit easier, just one pay stub and a W-2 from your previous year. But taking a look at what your DU is asking you for your employment. Another set of employment sections here, like in Social Security. Some of us just want to give like the 1099, you know, from the previous years. But DU is going to ask you for either proof of receipt or your award letter. So, and just keep in mind, it'll give you here or. So now, if it is a survivor's benefit, or benefit for someone else, it's going to give you and they want a proof of 3-year continuance. How you can prove 3-year continuance, it can be a verification of the beneficiary's age. So just always try to make sure that when you're looking at Social Security income, if it's a survivor's income, you are going to need to prove that there's a 3-year continuance. And again, a way is maybe a birth certificate, for the survivor's benefit. For the current, we don't necessarily always need to provide 3 months bank statements showing the Social Security is being deposited into account. As long as we have the award letter and it's for themselves, we can accept that as well. For retirement, again, we want to take a look at what if it's asking for. Here it's saying one of the following. So you can either give the statement of organization. So, I have a case where a client gets it monthly and they get a statement monthly. So that was sufficient. A copy of the award letter, you can either provide the 1099 forms they receive, or of course their tax information, because if they file taxes, a lot of the times they file taxes, it'll be on there. So that'll give you that option to be able to use that. For second jobs, so keep in mind, second jobs, they do have to have a 2-year history of receiving income from the second job. So we are going to need, again, just like the first job, a most recent pay stub and W covering a 2, but this one will say a 2-year period. If you're going to use the first and second income, we do need to be able to have that. And again, it is saying that they do need to have a 2-year history. Now, it will refer to you here on the selling guide, because right here it's saying 2 years recent. If there is less than 2 years, what the selling guide will allow. So of course, referring back to the selling guide, again, we can help you with that in the underwriting department on seeing if there's any exceptions to the rules. But of course, we do have to follow the selling guide. Can you guys mute, please? Vilma?
Max, I don't think you can overstate what a big deal this is for Texas. Texas has a lot of conference titles.
Can you guys mute?
2 different Baylor coaches.
Can you do 4:30?
And Texas,
Or anything after that?
Roadhouse.
Yeah, no, I don't think so.
Mute all and then you click the wrong thing.
No, I didn't. I said ask to mute. All right, guys. So moving on from that.
See, no, check it off.
No, it's done. So employment and income. This is just, I wanted to just show how it's going to break down. Again, this is being pulling from your 1003 application. So anything you put on there, it's going to break it down for you here. You want to double check that. I've had a situation where it pulled up twice. So I had to go back and check, and a lot of, I know I don't have the 1003 open here, but sometimes when we click on like adding a employment, we might accidentally double up on the income. So you always want to double check that your employment income is pulling correctly from the 1003 so that your DTI and matches what income you've given them and what you've inputted in the 1003. So I just wanted to kind of show where your following sources of income are being pulled from and to make sure that this matches for your borrower. Assets, in DU, it's going to ask for your totaling assets. This is based on your 1003. So it's going to pull, for instance, if they're purchasing and they need to bring $150,000 in plus closing costs, it's going to pull all that together here, and it's going to ask you to verify those liquid assets. Now, it does pull up stating that you do need a 1-month period. So just to keep in mind, we are asking for 2 because when we go to sell on the secondary market, they're going to want to see the seasoned assets. So I know that this says 1, and I see this a lot, but just keep in mind, I wanted to just highlight to just make sure that we're always providing 2 so that, we we do meet our criteria for our secondary market. For your gifts, I do get it a lot where sometimes, we're not being provided an eligible source. Do keep in mind your DU is going to ask for it. So if they are depositing it directly to escrow, that is a document of transfer funds. How do they document it? The receipt from escrow. So do keep in mind that there is going to be a requirement for an eligible source and your gift letter. So, to be able to source where that money came from. So now if they deposit it into their account, we are going to need to see 1 month bank statement to show that money was sourced coming out of that statement for that gift and a gift letter. Reserves, looking at the section where your funds are at, always keep in mind, I do have sometimes people are saying, well, no, it's not asking for reserves, because it kind of confuses funds required to close. You want to take a look at this here, your reserves required to be verified. So keep in mind that if your DU is asking you for 14,746 in liquid assets and 14,746 in PITI, this particular one matches because it was for a refinance, but you want to make sure that you have sufficient funds for your reserves and your closing costs. So always keep in mind that it is calculated based on your PITI. This was 6 months of that. So it asked for 6 months reserves for this transaction. Now to LP. LP, again, I'm a culprit. I was a culprit of it. I saw purchase eligibility, eligible, risk class accept, and then I moved on. But, again, we just want to definitely review our LTV. This one, I wanted to just place it. It's the same as DU, has a little different view. So I just wanted to go ahead and kind of show you guys the difference on how it looks. I did not do an FHA one, but maybe next time we can do that one because that one's a little bit more complicated. Loan to value, just double check your loan to value, your loan amount, your interest rate matches. This is always going to pull from your note rate, not your call rate. So just, keep in mind of that. Your estimated property value, your loan purpose, and your housing ratio, which is your front end TI, and your debt ratio, your back end. Here, it's going to give you your payments and payments including your debt. So points to look at here in an LP, your assessment summary, which is what we were looking at up here, your representation and warranty relief. I did not put that one there. Your asset details, employment and income, assets and reserves, credit and liability, and property and appraisal. LP is a little easier to read only because it's kind of like a checklist, which I love. So we're going to dive into that. So assessment summary, again, you want to make sure you're getting an eligible accept on both. You have to get eligible and accept. So you want to make sure you do that. Here, if you do get an eligible, again, just going back to the same thing as DU, if any circumstance changes, any, income, anything on your 1003 is updated, this can invalidate your eligibility for a warranty relief. So you definitely want to double check this with us to make sure that your eligibility for an appraisal waiver is given. So I put these two together only because here, again, if you do have a appraisal required, there is a Form 70. That's the shorthand appraisal. Normally we do the 1040, I'm sorry, the 1004. So just keep in mind, this is where you're also going to re-review, and it states loan is not eligible for the warranty relief with an appraisal waiver. If it is, it'll state it actually usually up here, it'll say, appraisal waiver identified. So, just reading these two portions for the appraisal will help. For income and employment, again, if it's a W-2 employee, it'll read it up here, letting you know what we need, whether it's 1 pay stub or 2 pay stubs in the W-2. Mainly, I put this up here because of self-employed. A lot of us use LP for self-employed borrowers because we want to use a 1-year taxes. So you want to definitely read this thoroughly. And the reason for that is I've gotten, transactions where the borrower was only self-employed for, 2 years and they only want to go 1 year. Well, you want to make sure that it's letting you know that if the business has been in existence in less than 5 years, you're going to need to present a 2-year tax history. So making sure you read this on the self-employed income is extremely important, which is why I placed this one up here, because a lot of the times we use LP for that purpose, but just checking your employment income and what it's requiring will help a lot. Assets and reserves. So of course, just like it'll read what we need in assets and reserves. On the, I think it's the bottom first page. I did not put a full page here. Under asset details, it'll actually be very clear on the amount of reserves required. But under the message, you will see that it'll let you know if there is a requirement for reserves or not. Now, keep in mind, DU and LP, of course, have their own criteria as far as large deposits. So we do want to make sure that whenever we're sourcing deposits, we're taking a look at this section here. I had this scenario where they were anything that exceeded 1875, which is 50% of their monthly income, had to be sourced. So, which is different with, of course, sometimes with DU. So you want to make sure you read this section here, because 1875 is a small amount for some of us. But when you're in your LP, if it's asking you for this, you're going to need to source them. If not, you need to reduce your assets by the unverified amount. Credits and liabilities, again, just like DU, we want to make sure that we're taking a look at what was omitted or to be paid off, because, like for instance here, this creditor was omitted on its own because it's a medical data. But if it is a collection, you do have to hit them with a certain percentage. So if it is if it's being paid off outside of escrow and it's a large amount, like here, 25,000, 10,000, we want to make sure these balances are sourced. So this is not this is more here because they were submitted to be paid off, but you want to make sure that when you're marking paid off or omitting, that you're providing your source of whether it's a cash out they're paying out there, so we know that. So we just need the statements of the accounts, or if they were paid outside of escrow, we need to make sure that we're sourcing that money. Any questions?
I have one. So for DU and LP, by any chance? So yeah, I had a question. DU and LP, I was wondering if they have any notes like that. That's that's given regarding like citizenship.
Yes, actually, yes. I did not put one up here, and I did have a situation where it did state that it, because it's crazy, it does pull it up, that it stated that the Social Security was new or recently issued to the borrower. So we do run Social Security verification. Usually that's what we condition. Now, if it is, for instance, like a DACA or somebody who's an employment verification, has a work permit, then we're definitely going to be asking for that stuff. So we are going to be reviewing the IDs, and we do review the IDs and all that stuff to verify that. But the biggest thing is sometimes DU and LP will notate that the Social Security is new. So we just require a Social Security verification. Any other questions? Let me see if you guys up here. Where's my chat? Any other questions, anybody?
Did we should mute everybody?
Yeah, but they can unmute.
Oh, okay.
Did I put you guys to sleep? No, no questions? So if you guys don't have any questions, I really appreciate you guys joining. we're definitely going to have a lot more classes like this. This one was a little bit just sort of like an intro. If you guys want something a little bit more in depth, we can definitely do that. These are just points for us to note for you know, us, especially us as LOs. Like I said, I know I'm definitely guilty of it, where we don't fully review it and just sort of wait for underwriting. But if we are pre-prepared, you know, we're able to I love it, Vilma. What? You know, we definitely can be pre-prepared for submitting for underwriting, and that way we're able to get a cleaner approval. So this is why we're trying to just do this so that we can pre-prepare ourselves as LOs. Like I said, I know I was guilty of it, of just submitting and getting my conditions and going off of that. But once I learned how to read DU and LP, it made it easier for me to get much cleaner approvals and close my loans a lot faster. So for example, I just did one and I knew what my conditions were going to be. And it was, you know, simply just transaction history of my EMD and updated bank statements. So it's nice to be able to have super clean conditions like that when we're pre-prepared based on what our DU and LP you know, call out. So we might do another class like this, getting a little bit more in depth on the underwriting side and how we read stuff. But this was just, like I said, just like more of a little introduction. So nobody has any questions, until next time.
Thanks, Jael. You're amazing.
You're
rock.
welcome. Who was that?
Dominic?
Dominic and Ricardo.
All right, guys. Well, we miss you all here.
Also, you get.
I miss you guys too.
All right, guys. Thank you, everybody, so much. Until next time. Like I said, you know, we'll keep doing a lot of these classes and we'll see what's next.
All right, I'm gonna go to your.
Okay, I know, but I'm trying to figure out how do I close this?
Right corner.
I know, I'm going. Thank you, everybody.